Hello and hi, we are from Group 5 and our presentation is about how can digitalization of loan collateral improve efficiency and remove fraud. As we all know, anything digital nowadays is not really considered as a new thing. This is such as digital loan, which its loan procedure can be done online without having to physically engage. Digital loan collateral is one of the innovations that has recently evolved in banking institutions. It has become a new form of secured lending. This technology mentioned gives access for the lenders to temporarily block the flow value of the collateral of the borrower without physically repossessing it. This digital loan collateral also ensures that if the borrower fails to make punctual loan repayment, the lender has the authority to sell the collateral and recover the cost. Therefore, whenever a bank or lender makes a loan to someone, they demand collateral so that they may feel confidence in the loan's repayment. This serves as a security for the lender, and whenever a lender issues a loan without any collateral, they will expose themselves to default risk loan repayment. Next, many lenders use manual and paper-based loan approval procedures that now seem out of step with the digitized world. As a result, there have been many defaults in repayment from the borrowers and also internal data management problems that create more work for the lenders. Therefore, it is discovered that using digital collateral to secure a loan will significantly decrease default rates and increase efficiency of time consumed, as well as increase the interest rate of returns of the lenders.
Hello everyone, today I would like to present about the definition or keywords of our report. In promoting of financial literacy globally, is very important to improve the key living standard to ensure the quality of lives for the disadvantaged groups in this fast-paced developing era. To be considered, financial digitalization is involving both individuals and businesses to make good use to their needs and prioritization in their business, such as to acquire financial advisors, collateral, and also checking accounts, which is why having financial access as a mandatory factor to plan a business for long-term goals as well as short-term goals. Digitalization in collateral is important to reduce frauds and improve efficiency to help the creditors in the loan processes that involving credit scoring, debt collections, and also evaluating the borrower's default risk that can assist the creditor's loan approval decisions.
Next, the first objective is to study on how digitalization can improve efficiency of loan collateral. First, loan collateral can be made easier with the help of digitalization. For example, pay-as-you-go financing need a small down payment to obtain ownership of asset using mobile payment system. Borrowers who cannot make a payment do not lose the asset. Instead, they are unable to consume the asset's flow of service until payment is continued. This advantages the bank in terms of flexibility repayment schedule and temporary digital reposition in the event of non-payment. Other than that, advances in technology can assist banks in obtaining repayments in problem of default loans by obtaining information on mobile and internet service usage, which generate data about users' internet activity. Using information contained in borrowers' digital footprints, digital collateral could be very effective. Banks can identify borrowers through mobile phones or social media. When a borrower defaults on loan, the bank may be able to contact the borrower's family for more information. As a result, borrower's social capital could be tied to debt claims using digital footprints as collateral. From borrower's digital footprints, bank may be able to obtain address information such as address for online shopping and would be able to identify borrower's physical location. As a result, bank can contact the borrower and they may feel more pressured. This can encourage the borrower to pay back the loan. When borrowers fail to make loan repayment, bank can use digital footprint as collateral for debt collection. Thus, digitalization has increased the efficiency of banking institutions, including improving their loan collateral process. Thank you.
Next, the objective 2 is to study how digitalization can reduce fraud of a loan collateral. Loan fraud has increased as a result of COVID-19 and economic pressure have caused scammers to take advantage of the opportunity to deceive victims who are in a serious financial trouble. Digitalization can reduce fraud in a loan collateral using machine learning and artificial intelligence. Automated processes can help detect false and synthetic identities, misrepresentation of income and employment, and collateral inflation far more efficiently than can be achieved through review by even the most experienced underwriter. When machine learning algorithms detect potential fraud, automated calls to revenue and vehicle appraisal service can help confirm or deny a suspected fraud and confirm the removal of these problematic applications. Next, Eco-Compliance provides a comprehensive anti-money laundering compliance solution, which is Know Your Customer. One of the KYC security checks is use tests on the Identity Mine platform to verify the identity of prospective borrowers during the acceptance process, for instance, passports, driver license, and national ID. This is accomplished by analyzing the document's image and verifying its authenticity. Lastly, document digitization and the use of transparent distributed ledger that can be viewed by relevant parties can increase efficiency, provide traceability of collateral, and reduce the risk of fraud. As the first step in any loan decision or new relationship, the prospect of our customers' financial and other necessary information is collected.
Hi, I will continue recommendation part. The first one is when people want to buy a car. By using digital collateral, the bank can reduce the cost to seize the car. Why? The bank can control the car remotely, but the car needs to be installed with starter interrupt devices first in order to enable the company to control the car. When the payment is overdue, the company has the right to stop the car. This recommendation has been applied in the US for subprime auto loans. The second one is the use of electricity throughout solar energy. By using digital collateral, people only need to pay when they use the electricity. This is because the electricity is given through the solar system. In this situation, the solar system is the collateral. This can be targeted to low-income groups or those who are living in rural areas. This is because the cost of the use of the electricity only be charged if they use it. If they didn't, they do not have to pay. But if they use but didn't pay, the firm can cut off their electricity or retake the solar system. This recommendation has been applied in Uganda. It also can be applied in Malaysia, because in Malaysia we often experience power outage or a lack of electricity supply. Sometimes it takes 2 or 3 hours, or it can be 2 or 3 days. We pay the electricity bill, but there are times where we don't get the right and affordable supply of electricity at the price that we paid. If the recommendation is applied in Malaysia, it can reduce the burden of people to pay the electricity bills. That's all from me. Thank you.
And last but not least, I will conclude our presentations. All banks are needed to develop their fintech digitalization in order to best utilize the technologies and refining the creditworthiness for the bank's future borrowers and consumers in innovative and effective ways. Therefore, technical innovations will create a greater value to the creditors in these digitalized financial markets to match most of the developing countries in the world for the good use for the individuals itself. That's all from us. Thank you.